Hi, I'm John Peterson. Thanks for taking the time to watch this video. By the end, you'll understand the basics of mutual funds and their fees and expenses. Mutual funds are a popular way to invest in securities. Because mutual funds can offer built-in diversification and professional management, they may offer certain advantages over purchasing individual stocks and bonds. But like investing in any security, investing in a mutual fund involves certain risks, including the possibility that you may lose money. A mutual fund is an investment vehicle that's made up of a pool of funds from many investors for the purpose of investing in securities such as stocks, bonds, money market instruments, and similar assets. If you own shares in a mutual fund, you share in the fund's performance. When the fund's underlying stocks or bonds pay income from dividends or interest, the fund pays those profits after expenses to its shareholders in payments known as income distributions. Of course, you have to pay taxes on the fund's income distributions and retained profits. Mutual funds are professionally and actively managed. A mutual fund employs a professional portfolio manager or a team of managers to decide which underlying investments to choose for its portfolio. The goal of an active fund manager is to beat the market, to get better returns by choosing investments he or she believes to be top-performing selections. Within the major categories of mutual funds, there are individual funds, with a variety of investment objectives or goals the fund wants to meet on behalf of its shareholders. For example, stock funds will focus on growth. Equity income funds focus on regular dividends. International funds target investments outside the U.S., and bond funds focus on corporate, U.S. Treasury, or municipal bonds. All mutual funds charge fees, and it's important to be aware of all the fees associated with any fund you invest in. Let's take a look at the different types. Fees are charged at specific times based on actions you take, and some are charged on an ongoing basis. Fees that may be charged on an ongoing basis include expense ratio, which pay the fund's portfolio manager, the cost of running the fund, and other expenses. 12b-1 fees, which cover sales expenses and marketing, sometimes including employee and broker compensation, and other expenses such as redemption and account or exchange fees. Fees are described in detail in each fund's prospectus, which you should be sure to read before investing in any fund. Many mutual funds also charge loads. Loads are paid to the broker for selling you the mutual fund. Loads are also known as sales charges. When you buy mutual fund shares from a stockbroker or other investment professionals, you might have to pay sales charges, called loads, which are calculated as a percentage of the amount you invest. Like commissions on stock or bond transactions, load charges compensate the broker for the time and effort of working with you to select an appropriate investment. Class A shares may have a front-end load up to 5%, which you pay when you purchase the shares. Class B shares have a back-end load that you pay only if you sell the shares during the period that charge applies, and Class C shares carry a level load, which can be collected each year that you hold the fund. Remember that while no-load funds have no sales charges, they may still charge 12b-1 fees, purchase fees, redemption fees, exchange fees, and account fees, in addition to the operating fees that all funds charge. It's important to know what fees your mutual fund will be charging. In many cases, these fees can range from 1% to as high as 3% or more, based on the fund selected. The level of fees can have a direct effect on your actual net returns. If you cannot understand the fees associated with your mutual fund, read the prospectus very carefully. Ask your broker questions, and if you're confused, call the mutual fund company directly. You can learn about safe money strategies by requesting a copy of our Safe Money Guide and Best Annuity Rates Report.